Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian economy. If you've been following the channel, you'll know that the war in Ukraine has had a devastating impact on the Russian economy. And in 2022, Russia recorded a net deficit of over $40 billion as a result of a combination of falling oil and gas revenues and an increase in spending mostly on defence. And unfortunately for Russia, that situation has continued into 2023. And the last time that I posted a detailed video on this topic, Russia had recorded a deficit of $29 billion for the first quarter. Now, as you'll also be aware if you follow the channel, Russia has limited the amount of data that it's prepared to release. It claims that this is a security risk, so we only get headline figures. But the results for April and May have now been released, and they show that in the 5 months to the end of May, Russia has racked up a deficit of $42 billion. So that means that over the course of the last 17 months, Russia has recorded a net deficit of $82 billion. So Russia is currently funding its economy using its reserves. So in today's video, I'll have a detailed look at the results for April and May. We'll talk about what's happening with oil and gas revenues because they are absolutely critical to the success of the Russian economy. We'll then go through Russia's other revenue, its expenditure, what's happening with its reserves, and then finally today I'll wrap up with my summary as to what I think is likely to happen for the Russian economy over the course of the next 3 to 6 months through to the end of 2023 and what the implications of this are for the global economy. As I mentioned at the start of the video, Russia has decided to limit the amount of data that it's sharing with the rest of the world. And when the figures are actually released, we tend to only see the headlines in mainstream media. In April, it was reported that oil and gas revenues had fallen by 64% compared with the same period from 2022 and declined by 5.9% against the figures for March 23. And interestingly, it was reported that subsidies from the budget to the refining companies from the oil reverse excise tax more than doubled from 38 billion rubles to 79 billion rubles in April, while the same payments to oil refineries under the damping mechanism operated by Russia rose to 107 billion rubles from 97 in March. And the reason that Russia is now having to pay these subsidies to its own refineries is that on the 5th of February, the European Union introduced a full ban on the purchase of all refined products. So they're no longer buying gasoline and diesel and kerosene. And as I've mentioned in previous videos, countries like India and China have their own refinery systems, so they're not interested in buying the finished products, which by definition are more expensive and provide more profit to Russia. They would rather buy crude oil and pass it through their own refinery process to create employment and profit within their own countries. So Russia is now struggling to find markets to be able to sell all of its refined products into. And as a result of that, the central government is having to subsidise the price of those refined oil products to encourage people to buy them. So they were the headline figures that we were provided with in April. And in May it was reported that the year-to-date deficit had hit $42 billion. But one of the reasons that I set up this channel is to try to find data that is not easily accessed in the mainstream media. And in order to get a detailed breakdown of the results being published by Russia, we need to go to the Ministry of Finance of the Russian Federation website. And you can see here that the Ministry of Finance actually published an Excel spreadsheet detailing all of the monthly figures dating back to January 2011. Now, there's obviously a lot of information here, and it's not presented in the best format in terms of talking through the numbers. So what I've done is transposed all of the numbers from 2022 and 2023 into a spreadsheet to make it easier to talk through. So these numbers represent the detailed information that Russia has released. However, not all of the information has been provided. You can see that there are a number of blanks on this table, but it does include all of the details that we need for our analysis. So let's start off by having a look at what's been happening with oil and gas revenue. Now, before we go on to talk about Russia's oil and gas revenue, I want to talk to you about today's sponsor, Masterworks, and the implications of Russia's invasion of Ukraine on both the global economy and global returns. The global economy once again appears to be heading towards a slowdown, and Germany, which is the 4th largest economy in the world, is currently in recession. And when the economy starts to slow down, it puts pressure on things like the S&P 500, where just 7 tech companies are currently producing nearly all of the gains. And as a result of the downturn in global returns, EY recently reported that the ultra-wealthy are changing strategies and allocating more to alternative investments. And in fact, the market for one alternative, art, has actually passed its pre-pandemic high. And the art market is an investment that you can access in minutes without needing millions, thanks to Masterworks. So far, Masterworks has sold $45 million worth of art, and every Masterworks exit to date has returned a profit, with 3 recent returns of 10%, 13% and 35%. So in view of these characteristics, it's no wonder that Masterworks has seen over 700,000 members trying to gain access, and there is now a wait list. Now, I want to make it very clear that I'm not providing investment advice, and before you make any investment, you need to do your own research. However, if you are interested in investing in Masterworks, then Joe Blogs viewers have exclusive VIP access to their latest offerings, which you can check out by clicking the link in the description below. All of these figures are shown in billions of rubles, and the current exchange rate is somewhere in the region of around 84 rubles to $1. But in terms of this analysis, we're really focusing in on the percentage variance. So it doesn't really matter whether we're talking about rubles or dollars or pounds or any other sort of currency. So if we start off by looking at the oil and gas revenues for April, you can see that the oil and gas revenues were 2.3 billion Russian rubles, which sounds quite a lot. But when you compare that to the figure for April 22 of 4.8 trillion rubles, that represents a year-on-year fall in the month of 52%. A fall in revenue of that nature would obviously be worrying in any circumstances, but what's particularly worrying from Russia's perspective is that the invasion of Ukraine commenced on the 24th of February, and by April a number of countries had already applied sanctions against Russia. So the results for April 2022 were actually impacted by the sanctions, and that makes the fall of 52% year on year even worse. If we now look at the situation for May 23, you can see that Russia delivered $2.9 trillion worth of oil and gas revenues, compared with $5.7 trillion in May 2022, which represents a fall of 49% year on year. And if we now look at the cumulative revenue for the first 5 months of 2023, Russia delivered oil and gas revenues of 8.1 trillion, compared with 16 trillion for the first 5 months of 2022, representing a shortfall of 49% year on year. So let's move on to talk about non-oil and gas revenues, all of the other income that Russia is earning. In April 23, non-oil and gas revenue was 5.5 trillion rubles, compared with 5.2 trillion for April 2022, which represents an increase of around 5% year on year. And in May, non-oil and gas revenue was 7 trillion rubles, compared with 6.4 trillion in 22, which represents a year-on-year increase of over 9%. And if we look at the cumulative situation for the first 5 months of 2023, non-oil and gas income was 19.7 trillion rubles, which compares with 19.6 trillion rubles for the first 5 months of 2022, and equates to an increase of 1%. So you may be thinking that Russia isn't doing too bad. Its non-oil and gas revenues are actually up year on year. But the issue that Russia has is that the Russian economy is an oil and gas economy. It's dependent on the success of those two industries. Historically, those sales were generating around 60% of all of the revenue that Russia was earning. So the 49% fall in those revenues is having a devastating impact because Russia has a certain amount of expenditure which it will need to commit to every single year. And once it starts losing top-line revenue from its most valuable resources, that feeds straight through to the bottom line. And that's why Russia is recording such big deficits right now. So let's have a look at what's happening with expenditure. Now, unfortunately, there has been no breakdown provided by the Ministry of Finance with regards to how this expenditure was arrived at. We've just got a total figure for each month. But what we do know is that there's been a huge increase in the amount of defence expenditure as a result of the war in Ukraine. In April 23, total expenditure was 10.8 trillion rubles, compared with 8.9 trillion for April 2022, which represents an increase year on year of 22%. In May, total expenditure was 13.2 trillion rubles, compared with 10.5 trillion in 22, representing an increase of 27%, and the total expenditure for the first 5 months of 2023 has been recorded at 40.4 trillion rubles, which compares with 30.7 trillion for 2022, and represents a year-on-year increase of 32%. Now, very interestingly, the data that's been published by the Ministry of Finance differs to what we're seeing in the mainstream media. The figures provided in the spreadsheet show that in April, Russia recorded a net deficit of over 3 trillion rubles, compared to a profit of 1.1 trillion in 2022. It also shows that a deficit was incurred in May 23 of 3.4 trillion, compared with a profit of 1.6 trillion in 2022. And these figures show that in the first 5 months of 2023, the net deficit is running at 12.6 trillion rubles, compared with a profit of 4.9 trillion for 2022. Now, as I mentioned earlier, I don't have a detailed breakdown of the expenditure, it's just provided as a total figure. So there may be something within that expenditure figure that's distorting those numbers. However, the overall summary here is exactly the same. What we are seeing from these results is that oil and gas revenue is down significantly, around 50%. Expenditure is up significantly, around 32%. And as a result of that, the Russian economy is currently in deficit, and that deficit is growing. Up until the point when the war started, Russia still had good trading relations with the majority of the world, including the USA. And as a result of this, it was keeping large amounts of foreign currency in banks all across the world in its own accounts. And this is what happens in the normal course of business when you're trading with lots of different countries. You keep accounts in each country in the local currency, and that means that when you need to make a purchase, you can just do a transfer in dollars in the USA, or in yen in Japan, or in pounds in the UK, and it just keeps things very simple because you can receive payments and make payments in the local currency without having to worry about exchange rates and the movement of capital and all those sort of things. So if we look at this table, you can see that the largest single disclosed asset at the time was the gold that Russia is holding within the country. And at that point, it was estimated to be worth $127 billion. Russia is a big fan of gold. It had been building up large reserves of gold, and for security reasons, all of that gold was held in the country. The second largest asset on this chart were the foreign exchange reserves that Russia had built up in China, which equated to around $81 billion. Over the last few years, Russia and China have been building their trading relations, and China represents a huge export market from Russia's perspective. And obviously, since the war started, the focus on China has increased even further. The next largest country on the list is France, and one of the reasons for this is because of the banking relationships. Prior to the invasion, SocGen, the French bank, owned a large Russian bank, and therefore there was a strong trading relationship on the finance side of things. And at the time that the war started, Russia had around $71 billion worth of assets in France. Japan is located relatively close to the eastern border of Russia, and the two countries actually share some oil and gas facilities on the island of Sakhalin. And at the point the invasion started, Russia had around $59 billion worth of assets in Japan. Germany was previously Russia's largest customer in terms of the purchase of natural gas and oil, and at the time of the invasion, Russia had around $56 billion worth of assets in Germany. Despite the fractious relationship between Russia and the USA is next on the chart with $39 billion worth of assets, followed by the UK at $26 billion, Austria, which also had strong banking relations and also was a big customer of Russian oil and gas, had around $18 billion, and Canada had around $16 billion worth of Russian assets. Now, in terms of the colour coding on this chart, this relates to the sanctions and the freezing of assets. The light grey section on the left-hand side, which includes Russia and China, have no implications whatsoever, so there was no freezing of those assets. The red sections are all countries that have applied sanctions against Russia, and all of these countries seized the entire amount of Russian assets. So Russia lost access to all of these assets immediately following the invasion. And the darker grey sections in the middle of this chart represent all of the other countries, and there was a mixture in terms of the response from these countries. But it was estimated that following the invasion, Russia lost access to $350 billion worth of overseas assets. And all of those assets are still being held. They're still frozen. There have been some calls for them to be liquidated and for the money to be given to Ukraine to support the war effort. However, that actually hasn't happened because of the international laws against this. There isn't actually any law that allows any of the countries to legally take the assets, liquidate them, and give them to somebody else. So until the war ends and we have some form of resolution, these assets will remain frozen and are still legally owned by Russia, albeit they can't access any of them. This chart shows the value of the National Wealth Fund in Russia dating back to 2008. Now, the National Wealth Fund is essentially the piggy bank of Russia. This is the cash that Russia is holding in reserve to cover its obligations in terms of its international debt and also to fund any shortfalls in terms of the national budget. And alongside the dates, the three columns that we've got here are the value of the fund in US dollars, the value of the fund in Russian rubles, and the percentage that that fund relates to in terms of GDP. So what we can see here is that back in February 2008, the National Wealth Fund only had $32 billion in it, which equated to less than 2% of national GDP. So at that point, there was a very, very small amount in the National Wealth Fund. If you've been following the channel, you'll know that the losses that Russia incurred in the full year 2022 were actually more than the amount that Russia was holding back in 2008. So that basically wouldn't have covered them to be able to fund that deficit. If we now roll forward through the years, you can see by 2010, the fund was up to around $92 billion. And then stayed at around about 90 billion until 2014. And of course, that was the year that Russia invaded Crimea and annexed that whole area. And a number of sanctions were applied against Russia, and it lost some of its trading relationships. And between 2015 and 2019, we saw a reduction in the National Wealth Fund. And by 2019, it was down to $58 billion, which at that point represented around 3.7% of GDP. However, between January 2019 and November 2021, the National Wealth Fund actually increased significantly, and by the start of November 21, it was up to around $198 billion, which at that point represented around 12% of GDP. So this was a significant bolstering of the National Wealth Fund over that period. And of course, that raises the question as to why that was done. Was Russia planning for some form of event, such as the invasion of Ukraine, when it knew that it would rely upon things like the National Wealth Fund to be able to fund unexpected falls in income? Now, if we move forward to February 2022, which was just before the invasion started, the National Wealth Fund had come back down to around $175 billion, which represented around 10% of GDP. And then by the start of January 2023, it was down to $148 billion, or around 8% of GDP. In 2022, the Russian economy recorded a deficit of $48 billion. And in the 5 months to the end of May, Russia has racked up a deficit of $42 billion. So those two deficits combined equate to more than half of the National Wealth Fund at the start of the war. So Russia is seriously depleting its reserves right now. And if Russia continues to experience deficits at the same rate that it's experienced over the course of the last 12 months, it's likely that by the end of 2023, the Russian economy will have run out of cash. So the losses that the Russian economy is experiencing right now are starting to cause them major problems. So what's the summary and conclusion today? Well, I wanted to post this video really just to give you an update as to what's happening in the Russian economy, because we see a lot of mixed messages in mainstream media. Talk about Russia doing new deals with China and India and countries like Cuba and Venezuela. And if you just look at those stories in isolation, you may think that Russia's actually doing okay. It's managing to find new buyers for its oil to replace all of the ones that it lost as a result of the sanctions. However, the bottom line on all of this from Russia's perspective is that they need to be making profit on those sales. There's no point giving away your oil for free or at a discount and making losses, because the only way of funding those losses is to dip into your reserves. And as we discussed earlier in the video, Russia did have significant reserves before it decided to invade Ukraine. Around half of those reserves have been frozen in international bank accounts. And Russia is currently seriously depleting its National Wealth Fund. At the start of 2022, it was estimated that the Russian National Wealth Fund was standing at around $150 billion. But over the course of the last 17 months, the Russian economy has lost $82 billion. So that means that the wealth fund is now down to less than $70 billion. And if Russia continues making losses at the same rate that it's made in the first 5 months of 2023, it would be out of cash before the end of this year. Now, not surprisingly, the Minister of Finance in Russia is forecasting that oil and gas revenues will increase significantly in the second half of 2023. But when you take a look at what's happening in the global economy, we are seeing a major slowdown right now. China is struggling. Its exports fell in May. It's having problems with regards to its manufacturing. It's got issues with regards to deflation. And it's likely that over the next 3 to 6 months, the Chinese economy will slow down further. And that means that there will be a drop in demand for oil. And it's obviously not just China that's bringing down the global economy. We've got Germany, which is the 4th largest economy in the world, currently in recession. We've got countries such as the UK, Australia, Canada, the USA, who are continuing to increase interest rates. And the rapid increase in interest rates over the course of the last 12 months will take around 6 to 9 months to have full effect in all of those economies. So the overall big picture is that it's likely that we're going into a slowdown, potentially a recession, at some point towards the end of 2023. And when we have a global slowdown or a recession, that means that demand for oil falls, and therefore the revenue earned by the oil-producing nations also falls. So when Russia is talking about increasing its oil and gas revenues in the second half of 2022, that goes against what's happening in the global economy. And as I mentioned a couple of minutes ago, if Russia doesn't improve its situation, if it doesn't start making some profit, it could potentially run out of reserves at some point over the next 6 months. So the situation from Russia's perspective is starting to become very serious. Now, the other option that Russia has is obviously to cut back on its expenditure. If your top line isn't increasing, you can cut your costs to be able to deliver a bottom line profit. And the most obvious way for Russia to cut its costs would be to stop the war in Ukraine, stop the huge amount of expenditure on defence and military equipment, and that could potentially balance the books. But as it stands right now, there doesn't look like any possibility that Russia is going to exit from Ukraine. So the overall summary of today's video is that Russia has seen a huge fall in its oil and gas revenues, and those falls are continuing month on month. And if Russia doesn't manage to turn this around, it will run out of reserves at some point over the course of the next 6 to 12 months. And if that happens, Russia would be officially bankrupt. So I'll keep you posted as soon as there's any more results published by the Ministry of Finance in Russia. Hopefully you found today's episode useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.